If you currently receive Social Security or SSI payments, take a moment right now to focus on this because a rule taking effect for July 2026 is changing who can examine your bank accounts, how frequently they can do it, and what could happen to your monthly payment if something you failed to report turns up. This isn't a proposal still being argued over in some committee. It's a documented rule change already moving through the Social Security system. Most retirees either haven't heard about this at all or they've caught a frightening headline without grasping what it truly means for their own deposits. This isn't a hypothetical future event. It's a real shift in how your benefits get verified beginning this summer. And there are specific things you need to know before it reaches your account. After years spent studying retirement benefits, senior tax programs, and the annual rule changes affecting older Americans, one pattern shows up again and again. Good, honest people get caught off guard by changes that nobody bothers explaining to them in plain terms. That's exactly what we're going to fix here today. If you find this kind of breakdown useful, consider sharing it with someone else who depends on these benefits, a friend, a parent, a neighbor, because these verification rules shift constantly, and there's rarely a letter that walks anyone through what a change actually means for their specific situation. Here's what we're going to cover. First, what this new bank access rule actually means in everyday language without the bureaucratic jargon that makes it sound more confusing or alarming than necessary. Second, exactly who this applies to right now, including a group of retirees who assume they're in the clear but aren't. Third, precisely what the system searches for inside your accounts, including accounts you may have completely forgotten about. And finally, the scam that's already forming around this rule, targeting people who just learned about it, along with the steps you need to take to stay protected and compliant. Stick with this all the way through because the part most people overlook comes near the end, and it's the part that actually safeguards your check. Let's start with what this rule is and why it exists. At the center of it sits a system called AFI, Access to Financial Institutions. Put simply, AFI is the electronic tool the Social Security Administration uses to log directly into financial institutions and confirm what's actually sitting in your accounts. This tool isn't new. It's existed for years. What's changing in 2026 is how often the agency is required to use it and how few barriers remain in its way when it does. For a long time, a threshold rule was in place. The SSA would only run a full bank verification if your reported resources crossed a certain dollar amount. If you claim to have very little, often no deeper check followed. That threshold functioned like a speed bump, limiting how often the agency could reach into your financial records. Under the new rule, that speed bump is being removed for a much larger group of people. The agency is now instructed to run financial institution verification on virtually every new SSI claim approval, regardless of how much you say you own, and to repeat that verification more frequently throughout the life of your claim. It's worth understanding precisely why this shift is happening, because the reasoning matters. The Social Security Administration's core mission is paying the correct amount to the correct person at the correct time. SSI in particular is a needs-based program built for people with very limited income and resources, and it comes with a strict resource ceiling. For an individual, that limit has long stood at $2,000 in countable resources. Exceed it and your eligibility is affected. From the agency's perspective, improper payments, money sent to people who were actually over the limit, represent one of the program's biggest ongoing problems. The logic follows naturally. Verify accounts more often and more thoroughly, and resource issues get caught early before a massive overpayment accumulates that the agency later has to claw back. That's the legitimate justification, and understanding it is exactly what helps you stay on the right side of the rule. An overpayment isn't free money. If the SSA pays you funds you weren't entitled to because you exceeded the resource limit, they will eventually discover it and demand repayment. More frequent verification is in part the agency's attempt to catch that problem early before it snowballs into a bill with your name attached. Now, here's the detail that trips people up, and it deserves your full attention. Plenty of retirees hear SSI bank access rule and immediately think it doesn't apply to them. I get regular Social Security retirement, not SSI or disability insurance. So this is different. You'd be correct that this particular rule as written today targets the SSI program specifically. But understand the broader direction all of this is heading. SSI is almost always where these verification expansions begin, because it's the needs-based program. Checking resources is already baked into its design. The tools, the automated systems, the bank access technology, all of it gets built and refined inside SSI first. Meanwhile, the broader conversation happening in Washington on both sides of the political aisle increasingly touches on the idea of means testing other benefits down the road. Means testing simply means adjusting what someone receives based on how much money and assets they already hold. And here's the critical point. You cannot means test anything without first being able to look inside someone's financial accounts. The verification infrastructure currently being expanded for SSI is the exact same machinery that would eventually be needed to examine resources for any other benefit program in the future. So even if this specific rule doesn't touch your retirement check today, understanding the system behind it tells you where things are trending. This isn't meant to scare you, it's meant to make sure you're not blindsided later. Now let's look at what the verification process actually does once it's triggered, because this is where things get concrete. When the SSA runs AFI on someone, it doesn't simply check the single account that person reported. The system is capable of running up to 10 geographic searches tied to an individual's information. It searches based on your address, and it can also pull in addresses and identifying information connected to a representative payee if you have one assigned. It identifies the accounts you disclosed, and critically, it also identifies accounts you never mentioned. This is the part worth absorbing fully because it's not about anyone hiding money. It's about simply forgetting. Plenty of retirees have an old account somewhere they haven't thought about in years. A savings account at a bank later absorbed by another bank, a small credit union account opened decades ago for a car loan that's been sitting quietly with a few hundred ever since, or a certificate of deposit, a relative setup on their behalf. You might genuinely have no memory that these accounts exist. The system doesn't care whether you forgot. It finds them and it counts them. So, if you're on SSI and you've been operating under the assumption that your countable resources sit comfortably below the limit, one forgotten account surfacing during a scan could shift that math in a way you never anticipated. Here's the complete list of what this system is designed to locate. It searches for liquid resources held at financial institutions, checking accounts, savings accounts, money market accounts, certificates of deposit, credit union share accounts, and special purpose deposit accounts, such as Christmas Club or Holiday Club accounts. Essentially anywhere money can be deposited or a certificate held at a bank or a credit union, this verification process is built to reach. It operates across all 50 states, the District of Columbia, and the territories. Roughly 96% of financial institutions participate in the automated system, meaning the agency can verify your accounts electronically without you ever being involved in that step. For the small remaining percentage that don't participate, the agency relies on a paper-based process instead. But the overall reach is nearly nationwide. And the bank scan isn't operating alone. A whole network of additional tools works alongside it to construct a complete picture of your financial life. Payroll information exchanges can inform the agency of your employer-reported earnings, sometimes quickly enough to adjust your very next payment. National new hire databases get tapped into as well. There are wage verification tools built specifically for the SSI program. Each one exists to confirm a different piece of your income and resource situation. The point isn't memorizing every acronym. It's recognizing that verification in 2026 is automated, layered, and far more thorough than whatever system you may remember from years past. Now, let's walk through what this looks like in practice using the kind of scenario the agency itself relies on internally. Picture someone applying for SSI who reports a small checking account holding about $20 and a $100 certificate of deposit. So total reported resources around $120, comfortably under any limit. Under the new approach, the agency still runs a full bank verification, even though the reported amount is tiny because verification is now mandatory regardless of the alleged amount. The scan comes back, confirms the checking account, finds no hidden accounts, and the person's resources line up with what they reported. Since everything checks out and stays within the small tolerance the agency allows, the case moves forward without issue. Now, change one detail. Suppose that same scan instead reveals the checking account actually holds far more than reported, or it surfaces an additional account the person never mentioned. Now, the agency has to dig deeper, verifying the value of the certificate of deposit, scrutinizing other balances more closely, and the small tolerance that would have allowed the case to move forward smoothly no longer applies because the verified total exceeds what was reported. And here's the pattern that carries through the entire life of a claim. If your verified resources remain low and consistent, you may face fewer repeat scans. But if a scan ever places you near or over the limit, expect repeated verification at multiple points going forward because the agency is specifically instructed to keep checking whenever the numbers suggest a resource problem. So, what should you actually do about all this? This is the section most people skip past, and it's the part that genuinely protects your monthly check. First, if you receive SSI, sit down this week and compile a complete list of every account that has your name attached to it, not just the one your payment lands in. Your main checking account, any savings accounts, old accounts at banks that may have since changed names or been bought out, credit union accounts, even ones opened decades ago and long forgotten, certificates of deposit, club or special purpose accounts. If you're uncertain whether an old account is still active, call the institution directly and find out. The goal is knowing everything a scan would uncover before the scan ever runs, so there are no surprises pushing you unexpectedly close to the resource limit. Second, understand precisely where your countable resources stand against the limit. For an individual receiving SSI, the long-standing countable resource ceiling is $2,000. Add up the liquid resources across every account you found. If you're comfortably below that figure, you have far less to worry about from a verification scan. If you're anywhere close to it, this is the moment to get absolute clarity because being near the line is exactly when a forgotten account can tip you over without warning. Third, if your circumstances have changed, report it accurately rather than waiting to get caught. The agency is direct about this. Its systems are built to uncover unreported resources, and your safest position is always accurate, timely reporting on your end. If you've come into money, even a modest amount, understand how that affects your eligibility and what you're required to report before the next verification cycle arrives, not after. Fourth, and this is the heart of staying protected, when the agency contacts you about a verification or sends a redetermination notice, respond promptly, respond honestly, and keep documentation of everything. The single worst response to a benefits verification is silence or guesswork. If you're uncertain how a particular account or asset affects your situation, that's precisely the kind of question to bring to a qualified professional who handles these matters directly, since the right answer depends entirely on your specific circumstances. There's something else worth flagging clearly because whenever a new rule like this gains attention, a scam attaches itself to it within days, and this one is already circulating. Here's exactly how it works. A retiree hears about this new Social Security bank access or verification rule through a video, an article, or a conversation with a neighbor. Shortly afterward, they receive a call or email from someone claiming to be a Social Security verification specialist, a benefits compliance officer, or a federal account review service. The caller insists that because of the new 2026 rule, the person's accounts need to be verified or pre-cleared, and that they can personally handle the process, protect the senior's benefits, or shield their accounts from the scan for a fee. Sometimes a few $100s, sometimes a percentage of future benefits. Here's the single sentence that exposes this scam every single time. There is no fee, no service, and no third party capable of shielding your accounts from official verification or handling this process on your behalf. Verification is something the Social Security Administration conducts directly. No authorized middleman exists who can opt you out of it, pre-clear you, or protect you from it for money. Anyone offering that is selling pure fiction, and what they're usually really after is your Social Security number, your bank account number, or a verification code. That's the actual target of the call. Remember this rule because it's your protection. The real Social Security Administration will never call you out of nowhere demanding confirmation of your Social Security number or bank details to comply with some new rule. They already have your number on file. When verification genuinely needs to happen, it runs through your application paperwork, your redetermination forms, and official mailed notices, never through a surprise inbound phone call demanding immediate action. If someone calls claiming they can manage this new bank access rule on your behalf, hang up immediately. If you have legitimate questions about your own situation afterward, go directly to the source yourself. Call the SSA at 1-800-77-21213, a number you look up yourself at ssa.gov, never a number a caller provided, and report the scam attempt to the SSA fraud hotline at 1-800-269-0271, as well as to the FTC at ftc.gov. Those reports genuinely help investigators track down these operations and warn other retirees before they lose any money. Let's bring this all together simply because everything boils down to a short list of actions you can take this week. If you're on SSI, build a complete list of every financial account carrying your name, including old or forgotten ones, so you know exactly what a verification would uncover before it happens. Call institutions directly if you're unsure whether an account remains open. Add up your liquid resources across all those accounts and understand exactly where you stand against the resource limit. If you're close, treat that as your signal to get clarity. Now, since a forgotten account is exactly what tips a borderline case over the edge, report changes accurately and respond promptly to any verification or redetermination notice. Accurate, timely reporting remains your single best defense against an overpayment you'd later be asked to repay. And when a question is specific to your finances, bring it to a qualified professional who can review your actual situation and protect yourself from the scam. No one can shield your accounts from official verification for a fee. And the agency will never cold call demanding your Social Security number or bank details to comply with a new rule. If that call comes, hang up and verify everything directly through ssa.gov or a number you look up yourself. This rule is part of a larger shift toward verification of senior finances that's more automated, more frequent, and more comprehensive than before. The systems behind it are only getting more capable, and that trend isn't reversing. None of this arrives with a friendly letter explaining exactly what it means for your check. The agency doesn't call to walk you through staying compliant. The system simply runs in the background, and the people who stay protected aren't necessarily the ones with the simplest finances. They're the ones who understood how the verification works, knew what it would find, and got their own financial picture in order before it ever ran. If this has been useful, pass it along to someone in your life who receives SSI or Social Security. A parent, a sibling, a neighbor, someone from your community. One share might be exactly what helps them get their accounts in order before a verification catches them off guard, because the system certainly isn't going to call and explain any of this in plain language. You might be the only one who does. Welcome to Smart Retirement Life, the channel where we break down complex regulations and deliver practical guidance to help you navigate your financial future with confidence and clarity. If you're new here, consider subscribing today so you don't miss essential information about benefits, financial planning, and retirement strategies tailored specifically for your needs. Smart decisions start with Smart Retirement Life.